Right, we're recording, Leon. Yeah, I wanted to hit record straight away because what happens is generally you start talking and a half hour flies by and we're like, oh, we should have just hit record. But
Okay.
we hit it's good. We're here. Great to have you on the show. How you doing?
Thanks for having me. I'm well. How are you?
Very well, mate. Very well. And I see I mean you've been doing the rounds on the big pods, man. Thanks for coming on the Little Once Bitten show.
Oh, no, thanks for having me. I've been following your podcast and I've been really appreciative of your content. So I'm happy to be part of it or to
That
be able to be part of it.
Thank you, mate. Thank you. And it was yeah, it was great to get to meet you in Riga. We had a great discussion there just outside the BTC Pay server day that afternoon on the last day. And yeah, it was fascinating conversation. And yeah, I want to just like pick through your brain really. But what we were talking about just before we started recording here, I was explaining my ringtone has a Bitcoin rap song on it, which a good friend of mine made, Hodler Than Thou, so badminton of Bitcoin. And your eyes lit up because you say there's a bit of a Bitcoin rap scene going on in Germany.
Yes, yeah, there is. There's so the 21 community, 21, which is a decentralized community in Germany that organizes meetups all over the place, and they nurtured a culture, a certain Bitcoin culture in the German-speaking countries that has also led to a genre called Pleb rap, which is basically Bitcoin plebs making rap music, hip hop about Bitcoin. So that's a cool development.
That's amazing. Yeah, I love these little pleb initiatives. You know, when people come together and they find, well, if they have a shared interest in Bitcoin already, then you find, okay, I've got a brand new best friend, like bam, right, standing right next to me. And if you have a shared common interest, such as rap,
Yeah.
then you can go start building Bitcoin educational tools or projects around that shared interest.
Absolutely, absolutely. And I don't know, it's like Bitcoin culture is growing. I've been to the US. I go to the US like once a year to immerse myself in the US Bitcoin culture because it's a little bit progressed. But if you think about it, Germany specifically, I know there's other places in Europe as well, like Madeira and other places. But Germany for Bitcoin is actually a good place to be because it's not taxed. It is taxed if you sell within 12 months, but obviously we don't do that. So if you hold it long term, it's not taxed and it's fairly regulated since 2016, both on a personal level and also for business. So being a business or being an individual holding Bitcoin in Germany it's actually good jurisdiction for being a Bitcoiner.
Interesting, because we hear all the bad news about Germany generally, like the energy crisis and spiraling prices out of control, inflation. Um, one particular thing that always comes across my radar when talking to German Bitcoiners is about the homeschooling rules, because as Bitcoiners having young families, they want to take more self sovereignty over their whole lives, and of course their children's lives. Why wouldn't you? That's natural. They want to be more self-sovereign with their education, but they've run into problems not only in Germany but in Holland and Sweden. They're the three main ones where it's very difficult, downright full on, outlawed.
Mhm. No, that is true. That is true. So it also that's amended in a way of almost it's probably going to be surprising for the listeners to hear that being a Bitcoiner in Germany is a good thing because overall the direction where things went over the past 20, 30 years were not positive.
Mm.
It was almost Germany turning, or Northern Europe, generally speaking, turning into a socialist enclave, a post-Soviet socialist enclave. So it might be surprising. It was surprising for me as well when I started to really look deep into can we incorporate Bitcoin into our business structure? Are there any tax problems? I realized, well, it's actually the most beneficial asset we can hold in our business entity, even though we live in Germany. So it was just, yeah, surprising.
That's amazing. And I know Rachel and Terahash, they're doing a lot of great work. I met those guys at the Einundzwanzig event at the Hotel Princess.
Oh,
And
yeah.
great event, great
Yeah.
event. And so I've plugged into the German vibe and I loved it. I absolutely loved it. There was such, and I had just recently on the show Chris from Cedar, who made the
Mhm.
for those that haven't listened to that, you can stamp your seed phrase into steel plates. God, that's a tongue twister. And yeah, and he was hosting. There was like kind of a "Do you want to be a millionaire" game show that they were live streaming on YouTube as well to the German community. So much fun, packed house, like absolutely packed house, and it was all in
Yeah.
German. And I'm sitting there trying to answer the questions, multiple choice, so I had at least some chance, right? But I couldn't understand a word of what was going on. But it was yeah, great fun, great plebs, and a lot of building going on, a lot of collaboration, a lot of projects coming and stemming from
Yeah.
Germany, which is great to see because stereotypically you guys are very well organized, you're very efficient, you like to build things that work. So yeah, more please.
No, I agree. I watched the episode with Chris. He's hilarious. I love his memes on Twitter, and Rachel is great as well. And what Harash is doing also. And in the 1880s, in the 1890s, so like 120, 30 years ago, when Nikolaus Otto, when he came with the combustion engine, and then Carl Benz shortly after he invented the car, there was on a gold standard, right? Germans are by heritage or by tradition great builders, but over the past 20, 30 years, there was such a misdirection in universities and in schools where people were directed towards technologies that were not necessarily innovative, but that were related to reducing the use of energy, for example. So people in university were incentivized to create products that would reduce the use of energy in a society. But obviously, we Bitcoiners know that for society to progress, energy consumption needs to increase. And because innovation has become, people were very much dependent on receiving loans by the government or VCs close to the government. And now that we have Bitcoin again, hard money that we can save in, I think it has the potential to again nurture innovative culture in Germany, because people are not dependent on universities and schools and the government to fund their projects, but rather they can save in Bitcoin and they can build a capital base from that, and then they can create and finance great products. So I imagine Germany or German builders to tap into their potential through Bitcoin again. Something I can see in the German Bitcoin community. There are loads of great products coming out of Germany. Also in the mining space, there are companies from Switzerland like 21 Energy and Riot. 21 Energy might be German, I'm not sure, but they're creating heating systems for homes, so you can incorporate mining into a home, use the excess energy to heat the home. There are a lot of exciting projects coming out of Germany and the German-speaking regions for sure.
Awesome, mate. Yeah, and we've got coming up on this show, we've got Hestia coming on, and they're a French company that are doing heating systems. Well, just plug and play electric radiators, basically, but they're going to be mining Bitcoin in the background, which yeah, it's awesome. It's awesome to see all of this this going on, and it's interesting that you brought up about how government grants and subsidies and funding just completely muddies the waters of any society, because that completely takes away the signal. And just well, it's been across Europe and starting in the UK as well at time of recording. These farmers, the outraged farmers that have taken to the roads, spraying shit all over the government buildings and whatever else. And yeah, I'm all for it. Nothing wrong with a little bit of civil disobedience. But how many of those farmers have been planting subsidized crops over the last 5 to 10 to 15 or even 20 years? There is something to be said. Like, we got to step back and have this conversation. It's like, right, if you truly want to take self-control, then you've got to stop taking the subsidized shitty fucking money to plant the shitty fucking weed oils that are killing people when they get into the cereals and whatever else when they're on the supermarket shelves. And Bitcoin, of course, does fix that. And slowly but surely, we as a community, we are orange pilling farmers. Yeah, we're definitely going for the beef farmers first globally, which is great. Initiative set off by the Beef Initiative by Texas Slim over in the US. But we want to talk about the real estate market. And Lauren should have been here to ask you the first question, but unfortunately, she's upstairs. She's on a lesson at the moment, so she won't be able to ask you that. But her question would have been, and remember, you've got to explain this as you would to a 13-year-old. Sorry, Lauren, if if you ever listen back. I told her that we're going to interview you today, and we're going to talk about real estate. And she said, "What's real estate?"
Okay, it's so for the term in English, as far as I know, would include anything that so land, commercial or residential property that is able to store value and yields a return. That's, I think, the definition of real estate. I might be mistaken, but to my knowledge, that is the definition. And in my world, so to say, I would concentrate on housing, which refers to residential real estate. So real estate mostly in metropolitan areas where people live. And then I would differentiate. There's also commercial real estate, of course. And then there's just land, agriculture. There is some land, for example, that is also becoming more valuable through Bitcoin, because generally speaking, since 1971, since we went off the gold standard, a very interesting development took place. So I just yesterday checked the year-on-year growth rate of the money supply and of the housing prices. And since 1971, the money supply grew around 6.8% in the US from 1971 to 2024, sorry. And the housing prices grew by around 5.9%. So what I'm saying is real estate has become so valuable, not because of its utility value, but because it has been priced away from its utility value, and it's used as a store of value to hedge wealth against inflation. So as Bitcoin comes in as a near perfect store of value, it potentially will drain real estate of the monetary premium, because people can just save in Bitcoin by default, and they don't have to invest in real estate. So Bitcoin overall, I believe, will reduce residential housing onto its utility value. But what will also happen is that land around untapped energy sources, for example, land in Canada around hydro, or in Paraguay around hydro energy sources, that land is actually increasing in value because you can place Bitcoin miners on that land. So the dynamic of the change of prices within real estate with Bitcoin is actually quite nuanced, I believe. But overall, we can say that housing, so residential property, will most likely be reduced to its utility value with the emergence of Bitcoin.
Which is making Bitcoin more of a, excuse me.
Just surviving this Tuesday. That actually.
Sorry, some random spaces just lit up on my phone.
No.
Yes. Returning housing to a consumer good, basically.
Yeah.
Which is, you know, Maslow's hierarchy of needs, shelter, which is what we need, which is what so many of us have been priced out of, especially, you know, from millennial age downwards, even Gen X, to be honest with you. I mean, how do you define owning your own house? Is having a mortgage owning your own house?
Good question. I mean, no, it's a liability. If I'm being honest with you, at the moment, the general mindset is houses will always go up in value. It's a safe bet. But I believe in the future, what it will change into is Bitcoin will always go up in value. It's a safe bet. And houses are potential liabilities. Why are they liabilities? Because you buy them on credit. And then the question is, do you actually possess something that you only own through a government certificate, right? So with Bitcoin, we know we don't necessarily own Bitcoin. We own the private key, so we possess Bitcoin, but we have full cryptographic control over Bitcoin if we own the private key. That does not exist with real estate. So in the US, for example, when I talk with people and I try to explain to them that Bitcoin most likely will drain real estate of its monetary premium, and that real estate deflates at a rate faster than real estate, even if it's bought on credit, people always tell me, oh, there are tax advantages in the US for real estate. That is true, but in my opinion, these tax advantages exist so the state can capture the value that is owned by the individual. So the state likes value to be stored in real estate because they can tax it and they can seize it and they can confiscate it if they want to. And that is a problem. So the tax advantages that exist right now for real estate are not necessarily beneficial for the individual. But I also have to say, I still develop real estate, right? So I will not stop, or we will not stop developing real estate, even on a Bitcoin standard, because we view real estate as a business. We don't necessarily see real estate as a store of value. We see it as a business. We provide housing to the market, and the market or the individual that rents, they pay us, which is the return of our investment, or what I think Mises called originary interest, basically the difference between capital invested and the return of an investment. So we see real estate as a business, but most people actually see real estate just as a store of value. I was looking into the numbers in Germany and in Munich, which is a very popular destination for international investors to place their money. Since 2008, so since the great financial crisis, when central banks really pushed the buttons on the money printer, the price of land in Munich tripled. So 70% of the costs of an apartment in Munich can be referred to the cost of land, which basically means that somewhere around 70 to 80% of a house is the monetary premium. So it's not the utility value. So 70 to 80% of a house is the monetary premium it has accumulated under the inflationary fiat system. And that will change over the next 10, 20, 30 years, I believe. So I don't know if you've seen the numbers, but Relay shared some numbers, and they said 70% of their OTC volume were private investors that were diverting some of the profits from real estate into Bitcoin. So we can already sort of see that Bitcoin is actually starting to demonetize real estate. And I also believe that gold pre-1971, when gold was the main store of value. But since 1971, gold has not increased that much in value, actually. I think it has doubled or something like that, doubled or quadrupled in its overall value. But real estate is 30 times as valuable as gold. So there's over 300 trillion stored in real estate. And I think that is like a nice analogy to help people understand the potential of Bitcoin. Because when I tell people, oh, Bitcoin is digital gold, they think like, yeah, gold is nice. You know, gold has like 10 to 12 trillion of market cap, but real estate has over 300 trillion. And that is the real potential for Bitcoin. I mean, the potential is obviously much higher because Bitcoin can absorb the monetary premium also that debt has accumulated, because debt serves as a store of value, weirdly, in the fiat system, and that is even larger than real estate. And Saylor likes to point out that he believes that Bitcoin will also become a part of bond products and debt products, and I can see that as well. But working in real estate and realizing how much value is stored in real estate, and then over the years understanding what a near perfect store of value Bitcoin is, that has really helped me to understand the proportions of this paradigm shift, or this, monetary revolution.
And there's the demographic angle to this as well, right? As that's changing. Do you want to dig into that? Because I know you've tweeted about, like, you've drawn references to Japan and the housing market bubble of Japan, and how that collapsed in the 90s and it's never recovered.
Yeah.
Not even close. So do you want to talk about the demographic shift as well, and Bitcoin? And you can use Germany or Japan or global, really, because I think it applies to most places.
Mm-hmm. Yeah, for sure. I agree with you. It does apply to most places. I mean, the US has sort of historically, as the world power, or owning the world reserve currency, sort of set the precedent for a global phenomenon. But what is interesting, so Japan in the 1980s recovered from the horrors of the Second World War. And by the 80s, brands like Toyota, Honda, and so forth were already household brands, and they were actually more famous than some of their competitors from the US. So what happened then in the 90s, the real estate market in Japan hit a peak because the Japanese central bank decided to lower interest rates and people were investing heavily in real estate. And it was a cultural phenomenon that companies as well would invest all their surplus profits into real estate rather than going.
Interest rates go down, money becomes cheap to borrow, people go running into the banks, and the rush is on.
The rush is on, exactly.
Right.
So something that we experience right now. But what happened then in the 90s, the boom came to an end, the bubble that was built up burst, and housing prices crashed. And this was paired with what you mentioned, a demographic change with an aging population and no immigration. So in Japan, there's around 1 to 2% foreigners living in Japan. So the aging population really hits the demographic. Now, 20 years later, interest rates are still low, but the population has aged to such a degree that there's a surplus in housing, which has led the government to buy up a lot of the abandoned houses. A lot of the houses were actually abandoned, and they give them away for free so people take care of them because they don't have the means or the time to do that. I was actually talking with a Bitcoiner at the Nostra conference in Tokyo, and he moved out from the US to Japan because he heard that he could buy a house for something like 20,000 bucks in a rural area of Japan. So it was like almost for free for the utility value that the house gave to his and his family. And the only thing he has to do is to renovate the house. And I think what is very interesting about that, if we look into Western countries, Europe, Northern America, Canada, and America, we have a very similar dynamic. We do have more immigration coming in, but we have a demographic change where the population is aging as well. And we can already see that real estate in rural areas is actually falling in price. So if we look at Japan at this point in time, then metropolitan areas, especially Tokyo, still has attractive investment opportunities when it comes to real estate. But other than the metropolitan area, real estate has completely lost its function as a store of value. It is seen as a liability. There's utility value in housing, of course. But usually what people do, what I heard is when they inherit a house and they don't want to live there, they literally give it away for free because it's too expensive to maintain the property. And it does not have the appeal of being a store of value. So I think looking at that could potentially give us some insight into how the housing market will develop here in the Western world. And there's another dynamic that comes in, and you said it at the beginning of the podcast, like Gen Z or the millennials. So I'm a millennial. The generation that comes after me are the Gen Zs. I personally have been completely priced out of real estate. So 3 years ago, 3.5 years ago, start of 2020, I moved to Berlin, and I was contemplating, should I either find good financing to purchase an apartment, or should I put the money in Bitcoin, right? So at the end of the day, I decided to put my money in Bitcoin because the financing was attractive, but the house was so expensive, or the apartment was so expensive, that I did not see any value in purchasing the house, and I decided to put my money in Bitcoin. And now interest rates have gone up, right? So now the financing is not even attractive. So Gen Zs naturally gravitates towards Bitcoin as their preferred store of value. And I think that might fasten that dynamic a little bit up. So within the next 10 years, if you're a real estate developer, you should be very, very careful. And I think you need to look into Bitcoin.
Wow. Okay. A lot more to unpack. Rural areas. You said the real estate in rural areas is trending downwards.
Yeah.
That's counterintuitive to me, because I thought, especially after the lockdowns of COVID and whatever else, that there were more people looking to kind of sell their smaller place in the cities, more metropolitan areas, and take that money and move further out, work more remotely, and get a little bit more extra space, a little bit of land, sort of thing, in the countryside. And we certainly saw that. We felt that where we live here in rural France. It does seem to have ironed itself out a little bit. But what you're saying, the data that you're seeing is no, like these places and the land is falling in value.
I have to be honest. Obviously, the real estate market is very nuanced. So there are parts of the world that I, first of all, don't know anything about. Like, I'm not so familiar with the dynamics in France. But looking at Japan historically, Germany and the US right now, the data shows that rural areas in general have a decreasing land and real estate value. But I do believe that certain parts that are beautiful, that are used also as like a holiday home and so forth, they still grow in value. But generally speaking, from what I know, is that rural areas do not or have not seen an increase in the price of real estate as much as metropolitan areas. And in Japan specifically, it is only the metropolitan areas and most likely also holiday places in rural areas that have real estate that is increasing in value because of demand.
Good news for plebs. Good news for plebs that want to build their citadels, right? And can get a natural stranded energy source. A nice plot of land with a flowing all year round stream would be wonderful little utopia to go and build something on. So, all right, keep stacking, guys, and keep an eye on those rural land prices. But
absolutely.
So can we actually before we delve into this a little bit further, let's find out a little bit more about you, because most people might be wondering, like, where the hell's this guy come from? Might not have heard you on the other podcasts and whatever else. So,
sure.
Where did you grow up? What did you study? And then how did you get into the the real estate business, excuse me?
Yeah, no, but real estate investment business is actually not wrong, because it has really turned into a pure investment, not a business. So actually that term is good. So I grew up in Germany. I grew up in Germany. And then when I was 19, I went to the UK to study philosophy and ethics, and a bachelor's degree. So I did like a joint degree. And in my philosophy degree, I tell you how Bitcoin came into my life, and then I go into real estate.
Okay. Whereabouts in the UK were you?
In Bath.
In Bath, right? Okay,
yes.
Yeah. Nice area. No,
really beautiful.
Yeah. Okay. Yeah. Nice. Lots of English pubs for you to plug yourself into as a young student.
Oh yeah.
Okay. Cool. Right. So you set your scene. You're 19. You're in Bath. You're studying philosophy.
Exactly. So I'm studying philosophy, and I remember the day until today. I went into a friend's apartment after leaving university, and he had a website open, and I asked him, "How do you pay on that website?" And then he said, "Oh, I pay with Bitcoin." Then I asked him, "Okay, what is Bitcoin?" And he's like, "Oh yeah, so it's a Chinese internet currency. We have to go to our friend Tom, and we give him money, and he wires it to somebody in China, and then they send us the Bitcoin. There's a certain application you need to download, which was Bitcoin Core at the time, and a wallet. And then we send the Bitcoin and da-da-da-da-da." And I was like, "Oh, that's cool." But I didn't really look into it, because at that time, money was just a medium of exchange for me. I was still in the fiat mindset, and I even believed that money was something that the state sort of grants, because that's what I was told in school in Germany. And then 3 years later, I studied financial economics in Glasgow, and I wrote my master thesis about Bitcoin. I got intrigued by the subject, and I wanted to look into it more deeply, because at that time there was Ethereum coming up, and there was, I think, Litecoin, Monero, Zcash. I mean, it was a time where all these privacy coins came up, and Ethereum came up, and I think Namecoin and Peercoin at that time, they already failed. But people still believe that scaling of Bitcoin would happen maybe on Litecoin, like on other chains, or people believe that they need to be changed like Ethereum. Looked into Bitcoin, wrote my master thesis about Bitcoin. And then in 2016, 2017, I came back to Germany, and I joined the family business, the real estate business. We set up a new company with a partner, and we started developing real estate, very traditional. So what we would do, we would identify an underdeveloped area within a metropolitan city. We'd acquire the property, we take care of the financing, we construct the property, we keep it, and we rent it out. So we do the whole cycle from financing to managing. And in that process, I basically learned about the dimensions of the real estate market. I learned that the real estate market is, next to that, the biggest market in the world. And that is the case because it is used as a store of value. And Bitcoin grew on me at that time as well, because for the first 5-6 years of Bitcoin, I was just reading Austrian economics and I was stacking Bitcoin, but I was not that involved in the Bitcoin scene, so to say. I wasn't aware of what Bitcoin really is. I saw Bitcoin as a great way to do transactions that the government cannot keep a lid on, and as a way to save, sort of like an ETF. But being in real estate allowed me to really understand the dimensions of like, where are we basically going? And somebody that has been very helpful also has been Saylor, at least his podcast. I've not met him, but in just listening to the way that he looks at Bitcoin and the leverage plays that he exercises with MicroStrategy, that reminded me of the nature of the real estate business. Because real estate, you know, what you do, you identify a certain dynamic. The dynamic is we live in an inflationary environment. And if you own a hard asset that produces cash flow, you can pay back debt and protect your wealth against inflation. But that dynamic obviously is not beneficial for the whole market because of the Cantillon effect. I mean, this is something that we Bitcoiners know about. The money that's being introduced into the economy is introduced through loans, and the people that receive these loans, they benefit from it, but generally speaking, the whole market does not. Savers are worse off, and people that act rational are actually penalized. So then I thought to myself, but using those strategies and acquiring Bitcoin like Saylor is doing, that's actually something positive, because number one, you defund the fiat system, and number two, you increase the price of Bitcoin that everybody else holds. So that dynamic just appealed to me, and I kind of liked it. And then over the past 2-3 years, I've been really going down the Bitcoin real estate rabbit hole, creating different strategies to accumulate Bitcoin, integrating Bitcoin into our business in order to help tenants basically live in houses that they like to live in, because that is our business. We want to hold them in our houses long term, and be able to withstand the pressures of the inflationary fiat system. So yeah, that's what I do now.
So were you born under the Deutschmark? Do you remember that?
Yes, yeah, I remember it very well.
Right.
Yeah.
Okay. How old were you when that switched?
I was about 10. Must have been around 10. I think around 10, 9 or 10, because I wasn't too. Yeah, I think around 10. Yeah.
Yeah, it would have been. Well, it happened in the currency markets around 97. I don't think it actually happened physically until around 99,
Yeah.
from memory. But
Yeah.
do you remember that point? Like your mom and dad sitting around the dinner table, friends, family, discussions. Like it was probably most likely over your head at the age of 10. But all of a sudden, like we're waking up next week and we're going to have new money. I mean, isn't that freaking unbelievable looking back at it? But what was going on?
I wish I'm at home right now, and back there. I think there's some money from the Weimar Republic. I see if I can find it at the end of the podcast to maybe show it. But to answer your question, yes, I was very aware of it, because the conversations at home were always centered around inflation, how the government is stealing productivity through inflation. So even before Bitcoin came into my life, I was sensitized for the dynamics of the fiat system. And I'm very aware. I remember that day actually. I was in school, and the day when the Deutschmark was not officially accepted at stores. Like I remember that day because I had some euros and I had some Deutschmark, and I was not able to pay at the store. And I was asking my father about it, and he said, Leon, look, the way that it works is the government uses the currency to basically absorb the productivity of the market. And the only way to be able to weather that is by owning real estate. So the way that real estate was talked about at dinner is the way that we talk about Bitcoin today.
Right.
You know? So I remember it vividly. And then he took a box out and he said, look, this is money that your grandfather gave to me as a remembrance to never trust the government. And what was it? It was money from the Weimar Republic. I think like 3 billion mark, 5 billion mark, horrendous sums on one single piece of paper. And then he explained to me, you know, inflation happens all the time, all the time. So in order to be able to protect your wealth, you need to buy hard assets. And that at that time, the hardest asset was real estate. There was obviously also gold, but gold is not a business. So the business was real estate development, and the dynamic of the fiat system favored real estate because it is scarce. It's also characteristic that Bitcoin obviously has, but Bitcoin is absolutely scarce. So it's scarcer than real estate. But these conversations as a child, they actually allowed me to understand Bitcoin when I then went into my philosophy degree. And I learned about Mises and Rothbard and the Austrian School of Economics. Then I learned about Bitcoin, and then things suddenly started to make sense.
Yeah, I love finding these little moments where we were predisposed to understand Bitcoin, because we've all been there, and it's just at what point does the sat drop? You know, at what point? Right. Okay. Now it makes sense. And then you start your real rabbit hole descent. So it's interesting to me. Yeah, you got rug pulled as a 10-year-old at the sweet shop, right?
Yeah.
By the state. It's disgusting, because one day you've got a Deutschmark and you can buy whatever you want with it at the corner shop. The next day, nah, that's not money anymore because we said so.
Yeah.
Unreal.
Yeah.
Unreal. True. So then you switch to euros, and then you come across to the UK, and now all of a sudden you're using the Great British Pound. They're the strongest currency in all of the lands. You know, it's just absolutely. I used to believe all of this nonsense. You know, that's the kind of stuff that we would talk growing up. And I entered the foreign exchange markets at the age of 1995, and I was on the dollar mark desk, US dollars against Deutsche marks, biggest market in the world by orders of magnitude. The next biggest market were dollars against yen. You're like, at 19, I was just wondering, how is Germany the most important country in the world with their currency? Like, what's going on? Why is that? And then 3 or 4 years later, rugged. Like, no more francs, no more marks, no more guilders, no more lira, no more pesetas, like none of that. And we're all going to euro. And is that, all right, seems legit. Now I can't believe it. I just cannot believe it. It's just unreal to me now.
Yeah. No, I agree with you. Obviously, when I was a child, I sort of accepted it as a given. I thought like that's like sort of the way it works. And it took me 2 decades, actually until now, to really understand the depths of these dynamics. So it took me some time.
So philosophy, was it through philosophy that you found Austrian economics? Because you wouldn't if you were doing an economic degree, that's for damn sure. They don't teach you about those guys in those 4 walls. But is it philosophy? Do they come in? Do they creep in there? Or is it all the Greek philosophers that you were studying? What made you like pick up the Austrian books?
It's a good question, actually, because before somebody asked me that question as well, and I tried to remember the moment when Mises came into my life, because I'm a very, very big Mises fan, and he's been very influential on my thinking. So I was contemplating, when did he come into my life? I don't know the exact moment, but it was but it was definitely through my philosophy studies, because while I was studying philosophy, I was concentrating on Greek philosophy, so especially Aristotle, and he wrote a book called Nicomachean Ethics, which was dedicated, I think, to his son. And the book was about the importance of living a life worth living, basically. And a lot of the Austrians always point to Aristotle in that book as also the beginning phase of the Austrian thought. And reading up on Greek philosophy, somehow the internet led me to Mises. And then I found Rothbard, and then I just fell down the rabbit hole. And then I learned about Antonopoulos, and I started watching he wrote a book back then. I think it's called The Internet of Money or something like that. Or but he was also giving Internet of Money. He was also giving presentations of YouTube, and that combination of Mises, Rothbard, and Antonopoulos, that just pulled me in very strong.
It's interesting because I wrote an article about usury recently, and
Yeah, I read that. I saw it. It's good.
pulled on Aristotle, right?
Yeah.
In his book Politica, I think, and he was talking about usury and you know how shameful it is, and like the absolute worst way that any man could make money. So yeah, if you were studying him, you would have been exposed to that concept as well. The fact that well, usury being the making money from money, using money, it's basically talking about unfair interest rates. And no interest rate could be more unfair than that of an interest rate placed on a mortgage, which is placed on counterfeit money. Like, when you go when you enter the bank and you say, I'd like that house, that's our dream house, I want to, put a roof over my family's head, and this is the place that we want to be and place ourselves. And here's my deposit. Here's my 50,000 euros or 50,000 pounds or 100, whatever deposit, which is a direct representation of 10 to 15 years of hard work and toil. Here's my deposit. Can you give me the rest? They counterfeit the rest and then charge you interest on it. So vis-a-vis, that is just pure usury, because
absolutely.
And not only that, you've greenlit the bank to inflate the monetary base on everybody else as well around you. We've been pulled into such a trap that it's just and which of course Bitcoin does fix, but not tomorrow, right? Bitcoin fixes this, but not the click of a fingers.
Not immediately. But what you said is, I mean, the incentive structure is just so wrong. I mean, Jeff Booth talks about this, I think, very eloquently, how he also says, money is the very base of economic activity. And if that base is corrupted, the whole incentives are corrupted. And Bitcoin changes that incentive dynamic. Because let's say I act based on my personal, on my ego, or whatever you want to call it, and I buy a lot of Bitcoin, I do something good for everybody else because I increase the value of everybody else's Bitcoin. And I also increase security, because with growing value of Bitcoin, people are also incentivized to mine, which increases the security and the hash rate of the network. So Bitcoin has the right incentive structure. I like that, yeah.
I also note on your thread recently, you've retweeted the Bitcoin therapist, and he's got a great little graph there: the U.S. rent prices versus income, and how it's just crazy. Like the price of rent just skyrocketing, and the income, the wages, just you can't keep up with it. There's absolutely no way.
No, there's no way. And you also, if you run a business, to be able to live off the cash flow and outpace the rate of monetary inflation just through your cash flow is very, very difficult. It's almost impossible. I mean, you'd have to grow your cash flow by a rate of 10, 15, 20% year over year to outpace monetary inflation. So it's destroying the entrepreneurial spirit within a society. Potentially it does that on purpose. Maybe it's a control mechanism. I don't know, but luckily with Bitcoin, we can opt out of that system, which I personally like on a personal level. Like when I learned about Bitcoin, I thought to myself, amazing, because I studied financial economics, and I remember I went to a fair where all the investment banks, they were advertising their jobs. And I was like, that's not really for me. And I was contemplating what to do, and then I found out about Bitcoin. I was like, that's pretty cool. So I can do that. I don't need to work for any government, the government or a company. But then I joined the family business to help the business grow. And it took me another 6 years to have the confidence to then say, you know what, I'll actually focus on Bitcoin. So that took me a long time, because my theory is that in school, I was manipulated so strongly that my thinking of I can use Bitcoin to become a self-sovereign individual, I almost thought it's like a negative thought. Like when I started thinking like that, I had like pros and cons in my head. I was like, but you need to, I mean, this was my 18, 19-year-old. But aren't taxes good because you support the government, you support the school, and da. And then through Bitcoin, I learned it's the exact opposite, right? And it took me some time to trust myself.
Man, I've said it before, but the education system is their biggest weapon against us. And control, obviously, having control of the financial system is huge. But if you can, like a 5 to 15-year-old isn't using the financial system, so you have to use the education system first to get that mind body control that they seek. And it takes a lot of undoing, and that's why Bitcoin is so hard to understand and so hard to orange pill people, because of this conditioning that they've all been subjected to. You've really got to de-school and deprogram yourself and be willing to everything is a lie, right? You've got to be willing to embrace that and start thinking critically. So, well, let's try and there's some actionable points here, right? So we've got to kind of like get a message out to the plebs, but then get a message out to the business owners and the real estate developers and whatever else. So let's look at both ends of the spectrums. Let's go with the plebs first. What can the plebs be doing with regards to thinking about real estate? Maybe they're at a point where they might be, people have been selling their homes, right, to then go into rent, so they can take the equity out of the home to stack into Bitcoin. Is that a crazy thing to do?
No.
Right? Okay. So, well, let's start there. So if a family out there is considering doing that, let's walk through that game plan. Maybe they've got 50 to 100,000 pounds of equity tied up in that home. What's the next steps for them? How should they be thinking about it?
Okay, just a disclaimer. I would just maybe tell a little bit what I would do, and then what you guys who are listening doing. That's like your business.
Yep.
And then also, I don't want to like diminish the value of developing real estate, and I will afterwards also explain how real estate developers can stay competitive and successful by implementing Bitcoin strategies in their business. But to answer your question first, I personally believe it is a very good idea to not tie up your capital in real estate and personally view real estate as a utility object and not as a store of value. So that's the first step, I think. Like, change the mindset of thinking about house as a store of value and as a good investment. Think about it as a liability. And the opportunity cost of having your money in real estate is that you give up on the deflation of Bitcoin. And in this early monetization period of Bitcoin, the deflation of Bitcoin outpaces the growth of real estate, even if you buy it on leverage. Because if you buy real estate on leverage, you can buy it, you have maybe 20,000 equity and you get another 180,000 or 200,000 from the bank. And that makes it look very attractive. And that is maybe true within the fiat scope, right? But if you compare it with Bitcoin, Bitcoin deflates much, much faster. So that is just basically an axiom that we have to accept and build our investment thesis and our thesis around real estate from this first principle.
And by deflate, by deflate, you mean the amount of Bitcoin that's going to be available on the market?
Oh, by deflate, I mean the price increase within like Bitcoin, basically.
Right. Okay.
Yeah.
Measured in your local currency.
Exactly.
Right, okay.
Exactly. So view Bitcoin as your store of value, and then view house as a place that has utility value to you. And think about it that way. And I personally made the decision, I will only buy a place if I can lend in favorable terms against my Bitcoin. So I stack until I can lend against my Bitcoin to receive enough fiat to then be able to have the equity to buy a house. And that's a decision that I made 3 years ago. And I think, it was a very good decision for me, both financially, yes, but also mentally. Because think about what a house does to you. Like, if it's very important to have a beautiful home. It's very, very important to have a beautiful home, especially if you have kids. You know that, right? I don't have kids yet, but I see it with my friends. Once they have kids, they want to settle in, they want to have a beautiful home. But to have excess cash and invest it in real estate at a time where we have a near perfect store of value that increases in value between 50 to 150% a year is just not a good idea. And then people ask me, okay, but Bitcoin has no cash flow. That is very true, but Bitcoin is not a business, it is a store of value. And the cash flow of real estate does not predominantly play in its increase in value. Real estate has become so valuable because it is used as a hedge against inflation to store value, right? So the cash flow of real estate does not play into its function as a store of value. It is only important if you are a real estate developer. And if you like, I can also discuss Bitcoin strategies for real estate developers, or maybe you have a question regarding strategies for plebs, then we can.
Well, yeah, I guess one pushback would be, not pushback, that's not the word, but one thought process would be for a pleb is like, well, what if I were to buy that place to rent out and use the property as a capital good, So I'm first of all, I'm using the leverage that I can get through the finance. Then I'm buying the property. It's good to go, and I can now list it on Airbnb or VRBO or whatever else. What are your thoughts around that?
I mean, look, if you have a big stack and you want to have cash flow and you don't want to sell your sets, you can lend against that stack, get a loan from a bank, buy a property and rent it out, and then you have cash flow. If you can live with, it depends how deep you are within the fiat scope. If you say, I do not want to take fiat credits, then that's a no-go. Just stay within Bitcoin, create something valuable to society, and you'll receive money in return. You don't need the cash flow from the business. If you're okay with getting credit within the fiat scope, lend against your Bitcoin stack, take that as equity, get a loan from a bank, buy an apartment, rent it out, and then you have cash flow. But I would personally never sell my Bitcoin to invest in real estate.
Aha. Interesting. Because that was going to be my next question. Because there could be some people out there, or, certainly in the next 4 years, where 1 or 2 Bitcoin could buy you that property that you want or desire. And that person might be willing to sell that property that you want or desire directly for Bitcoin. Is that something? I would not. No, you're still interesting. So you would still look for the alternative strategy there?
Yeah, I would look for a provider. I mean, there are like Hodl from I think they're from Riga, right? They are providing lending. Yeah, they're providing peer-to-peer lending services. Then there's Ledden, I think, who I recently encountered from the US. So I personally would take my stack, if it's a KYC stack, and I would place it with such a company in a multi-sig that I control, lend against my Bitcoin, and then buy the real estate. So let's just say a coin would buy me, so 1 Bitcoin equivalent to 1 house. I would wait another cycle, and then 1 Bitcoin is equivalent to, let's say, 5 houses. That means that equity that I receive by lending against my Bitcoin is enough to then buy a house. So lowering our time preference also in this regard can be very helpful, I think.
Okay, excellent. All right. Some good actionable points there for the plebs to start thinking about. And of course, there is no right answer because everyone's in a completely different time of their lives. But it's good to have different options available to us. And this lending market will, of course, progress over time, and there'll be more and more services coming out for sure as the financialization process around Bitcoin ossifies and grows, I should say, not ossifies. So businesses, those people that are in the real estate business, what's the word for you?
Sure. So there's 4 things that I talk about. Maybe I'll say them now quickly so I don't forget them. Number 1, maintenance reserves. Number 2, the creditworthiness of your business. Number 2, the ability to refinance real estate. And number 4, the ability to leverage the value of your real estate into Bitcoin, similar to how Saylor did it with MicroStrategy, even though there's a bit more interest rate sensitivity in the real estate scope. So number 1, very obvious, build maintenance reserves for your real estate. So the property that we hold, we take, actually at the moment, we can't act on the strategies as much as we like to, because we have to use a lot of our cash flow to pay for maintenance reserves. So we can't save as much as we would like to. But in theory, I would suggest to take between 10 to 20% of the rental income and hold it in Bitcoin. Hold it in Bitcoin for 5 to 10 years. That will allow you to be able to maintain your property, which is important, to keep rents at a certain level. And number two, if you own Bitcoin in your business, be aware that it will substantially increase your creditworthiness over time. At this point in time, not that many financial institutions are aware of the superiority of Bitcoin as a store of value, right? Right now, real estate is not just the number one store of value in the world, it's also the number one collateral accepted by banks to give out loans. But I believe that also the collateral function is something that Bitcoin can and will take on in the future. So if you buy Bitcoin now and you hold it in your business, your creditworthiness will increase dramatically over time because Bitcoin increases in value so fast. And if you are in the real estate business, it is actually very important to be able to take credit because it's such a capital-intense business, and inflation has increased over the past 50 years that you need to work with debt. So you cannot finance construction otherwise. So bear in mind that incorporating Bitcoin into your real estate business increases your creditworthiness over time. So now the last 2 points that I believe are important to be able to stack basically hard is if you own real estate and that real estate has increased in value substantially, usually what real estate investors do, they refinance the real estate and the additional value of the real estate they take. Let's say a real estate project was worth $8 million. And after 5 years, it's worth $10 million. A real estate developer usually would take out another 2 million against that building. So the increase in value they would take out as a loan, and they would then invest it into real estate. I suggest to just invest it in Bitcoin. And this strategy, generally speaking, plays into the whole leverage strategy. If you look at your real estate, it's a liquid capital. There's nothing you can do with it other than lending against it. There's nothing that the market can do with it. It's actually a very negative placement of capital. But you can use it as collateral to lend against it and then buy Bitcoin with the additional cash. So refinance the property, leverage the property if you like to. And for a pleb, I would not suggest that. If you live in your apartment, I would not necessarily suggest for a pleb to lend against the property, because if you don't have cash flow, how are you going to pay back the debt? And then you'll end up on the street and then the Bitcoin is worth nothing. So this strategy, I just want to make a disclaimer, something I would suggest more to businesses, right? Because real estate developers are used to using leverage. But if you think about the effects of leverage, which are not positive for society, leverage the value of real estate into Bitcoin to also position yourself in a world where Bitcoin is the number one store of value. And if you most likely successfully do that over the next 10, 20 years, then you can live off the cash flow of your real estate and view it as a business. Your real estate might not be worth as much as today, but the Bitcoin that you bought today will be worth much more. Plus, you have the business of renting out real estate and have cash flow to live off and do not have to touch your Bitcoin. So that's like a little bit how I envision that, yeah.
How did you orange pill the family business onto going onto this, or are you still trying? Like, is this what you've implemented in your own business?
Well, we are going down the rabbit hole, so to say. So the orange pilling process is happening also in a different scale. And when I started talking about Bitcoin, it's a long time ago, and I'd say my colleagues and my partners that I worked with at the time, I gave them my master thesis and they read it and they said, this is pretty cool basically, because it's like digital real estate basically. Like the whole thesis is very similar. You buy a scarce asset to hedge against monetary expansion, but then they were thinking like, but what is it? You know, well, I can't touch it. You know, they're used to bricks and mortar, not to bytes. Right? So there was a lack of trust. But over time, things that, not that I said, because I was just saying what other Bitcoiners were saying, but generally speaking, things that we Bitcoiners expected actually happened. So after maybe their third or second cycle, I'd say, they are now starting to trust Bitcoin's ability to actually store value. And they understand its advantages over Bitcoin, over real estate, specifically because it's cheaper to custody and it's cheaper to maintain, because the maintenance costs for real estate have skyrocketed over the past 3 years because of inflation and because of so-called ESG requirements.
Ah, okay.
Yeah.
Yes. Regulatory creep.
Oh, yeah.
Right. Okay. So now you've got to hire out, laborers, workers, handymen, whoever,
Yeah.
at the inflated rate, because of the materials that they need to buy have gone up in price to go in and to refit the houses to meet the latest scammy ESG regulations.
Exactly.
Oh,
And
man.
yeah.
And yeah, multiply that across however many apartments or homes that a real estate investment company might own.
Yeah, exactly. But because I like the real estate business, I mean, I like to develop housing, I like to provide housing to the market. For the past 3 years, I've not been actively involved on site because I've dedicated myself to developing the strategies and consuming as much Bitcoin content as I can. But my colleagues are still on site, and we meet from time to time to discuss, hey, how's the site going? How can we use Bitcoin to finance this project? And we like the real estate business. We like to build, we like to develop houses. It's a craft. We don't do this. We don't see it as a financial asset. We also see it as a financial asset, but primarily we develop real estate to rent it out as a business. And we continue to do that on a Bitcoin standard, or we will continue to do that on a Bitcoin standard. So working on the intersection of Bitcoin and real estate has been very challenging. Because it has been challenging to begin with to help the people that I work with understand my strategies. Because it's one thing to say, oh, Bitcoin is a good store of value, but it's another thing to say, leverage the value of the real estate that you've built over your 30, 40, 50-year long career, because some 20-year-old suggests to you that now there's a new digital store of value that is superior to everything you've done in your life.
Yep.
So I do understand the reluctance sometimes from real estate developers to accept this fact, but Bitcoin is what it is, and it's going to do what it does, and we can either accept to benefit from it or we don't.
Will your company, or do they, accept rental in Bitcoin? Is that something that you've managed to push through?
No, not managed to push through. Not that we don't want it, but I've not managed to push it through. I think you mentioned it to me before, and when you mentioned it, I started to look into the possibilities of doing it. The problem at this time is that there's two things. Number one, the infrastructure of the company that we work with that takes in the payments is not capable of doing that. I first have to make sure that everybody within our company is orange pilled, and then I go to the companies that we outsource, so to say. But I believe, let's say, over the next 3 to 5 years, I think this is something that is realistic.
Well, the market will soon push you, right? Because the more people that hold Bitcoin, they're gonna. Well, why can't I pay my rent in Bitcoin?
Yeah, we could offer it. I mean, we could offer it actually, and if people want it, they can do it. And then we don't have to convert the rental income into Bitcoin. We just keep the rental income received in Bitcoin and use that for maintenance reserves. So that'd be very good. And then also something else, also the last 18 months, actually the whole industry was on the brink of collapse. So we were really maneuvering a very tough environment. A lot of our competitors went bust because what happened? Interest rates went from around 1.7 to 2.5 up to 6, 7, 8%. And those real estate developers that did not fix their interest rate, they are now suddenly faced with an interest rate 3 times as high, but the cost for maintaining the property are also 3 times as high. So the whole cash flow is being drained for interest rates and maintenance reserves. So the past 18 months were actually a fight for survival also for us. So there was little time to focus on projects like getting the rental income in Bitcoin, because I was very much focused on buying as much Bitcoin as we can to be able to have the purchasing power to maintain the existing properties, to not drain the cash flow and take the cash flow to pay the interest rate. But things are calming down a little bit now. We have restructured our debt structure, and the Bitcoin that we hold has luckily increased in value, where we are in a position right now where I can have time and also the mindset to deal with such things.
So how far out can you fix those rates? How does it work in Germany? It's slightly different across Europe, different countries.
Yeah, you can actually fix it up to 30 years.
Wow.
So we tend to do that. So they give you favorable terms if you don't fix it, because they hope that you do it, and then when the interest rates go up, they just pass
So
it
is this
on
what
to you.
your competitors were doing? Were they taking shorter term and taking the free cash basically? And this is the problem that I see in the UK housing market, because I think a lot of people during that first flood of COVID nonsense in 2020, one of the dangled carrots by the government put in place to kickstart, in air quotes, the economy or keep it going, they put stamp duty down to zero. Stamp duty is a tax, an extra tax that you pay on a house when you buy the new house. You have to pay a stamp duty. So that was reduced to zero, and that spurred a huge amount of sales, and people were moving and doing all the, it was crazy, and a hell of a lot of new mortgages coming onto the market, right? Probably 3 to 5 year ones as well. So we're going to get to 2020, well, we're already here, 2024 and 2025. And that was when interest rates were down at like 1.5%, 2%, whatever. Well, they're not anymore. They're like 4.5%, 5%. So when you come to refinance that, well, you tell me what's going to happen to the UK residential market.
Yeah, I'm not an expert on the UK residential market, but I can take a guess, because I think the dynamics of real estate, generally speaking, are very similar across the board, because we all follow the Fed within their monetary policy, basically, since 1971. So once people are going to be hit by increased interest rates, they're going to be forced sellers, or not necessarily, but most likely. And that will reduce, that will create a surplus in houses. And if demand is not where it used to be, basically means prices are going down. And we can already see the dynamic a little bit in Europe, but in the US as well. Yeah.
Lots to think about, plebs. Like, so much. There's so much here. Okay. I feel as though we've been down to the bottom of the real estate pit and back. But are there any other points that you wanted to make that we didn't touch on here?
Maybe one last point just to emphasize. Yes, Bitcoin is an amazing store of value, but it's also great collateral. And those two functions are in this system right now are fulfilled by real estate. And it's problematic because real estate has become unaffordable. So people cannot store value, and they don't own collateral to lend against, which is very important in an inflationary environment. So please don't sell your stacks. If you spend your sets, that's my personal opinion, do it in a circular Bitcoin economy. Do it to orange pill people. Do it in a way that supports the Bitcoin ecosystem. But don't spend your valuable sets to people that don't appreciate it, because it will allow you, once the fiat system will hit a very negative sort of spiral and we go into hyperinflation, the Bitcoin you can use as collateral to also lend against, to then support your business and your family. So, yeah.
Yeah. Okay. Right. Last question. If you had one last orange pill left to give to somebody, who would you give it to and why?
I would like to orange pill Warren Buffett, actually.
Yeah.
Because he has been very inspirational to me as a teen in understanding value investing. So for me, the ultimate value investment is Bitcoin because it's completely undervalued. And if you look at mining companies and you look at their balance sheet, like there's companies that hold so much Bitcoin, they are completely undervalued. So the value investment thesis fits into Bitcoin so beautifully. But Warren doesn't get it because he's used to the fiat system and he's used to continuous debasement of currency. And he lacks the ability to view Bitcoin as a store of value, always refers to it as a business. So yeah, it would be him.
Right. I think he'd probably choke on it and that'd be the end of him. But, you know, who knows? Well, it's rat poison, right? According to him. And
yeah, it's very sad about what he says about Bitcoin. Also, Charlie Munger. I mean, it's complete nonsense what they said about Bitcoin.
yeah. Well, Leon, when you're the rats, you have to be very wary of it, right? That's the right. Well, I really appreciate you coming on and going through all of this, mate. Are you going to be hitting any of the conferences? You over in Madeira?
Yes, yeah. Thank you for inviting me, first of all.
No
Yes,
problem.
I'm going to be in, yeah. I'm going to be in Madeira.
Will you be giving any talks or on panels?
No.
Okay, cool. Well, we'll get to hang out. We'll have a few beers. We'll have a few punches and carry this discussion forward. Yeah, would love to. I mean, there's got to be. Will you be presenting in Prague?
Yes. No. Okay. You were asking generally speaking. Sorry.
Yeah.
Generally speaking, I'll be talking in Prague. Yes.
Yeah.
I will
Cool.
be there. Mm-hmm.
Excellent. Yeah, I was going to say we need more. We need more of this knowledge and getting up on stage. We you know, keynote with slides or being part of a panel talking about this would be very, very beneficial to the Pleb network. So I'm glad that you are getting that opportunity. So yeah, well, we'll see you in Madeira, mate, and fingers crossed we'll get across to Prague as well this year. So looking forward to hanging out. And thanks for coming on. Thanks for what you're doing. Thanks for stepping up. Thanks for, you know, adding value to the Bitcoin space. And yeah, all the best.
Same to you, all of it.
Thanks, man. See you.
No, thank you. I appreciate you. Yeah, really appreciate you. I mean, you've done a lot. I appreciate what you've done for the community, also with your podcast. I know it's a lot of work, and I appreciate you giving me the chance to be part of it.
Feeling the love, brother. I'm feeling the love. Catch you soon. See you in Madeira. Looking forward to it.
See you. Thank you.